How you doing? My name is Matt Druin. For those of you who don't know me, I have been a full-time real estate investor for quite some time now. I've been a real estate practitioner in investing, brokerage, and development for over 17 years. I started when I was 22 years old in 2006 when I bought my first four-family property. What you are going to see is this is one part in a nine-part training series. In this video, I'm going to talk about kind of the outline and the why behind the progression of these nine trainings. So you can understand the progression and also, the big picture in terms of my total strategy that I use and show others how to use in swimming upstream into doing larger commercial deals. This is really important to those of you who are experienced real estate investors that are trying to walk away from their W-2 or from being actively involved in their 1099 business if they're self-employed individuals, but that want to hit those big financial goals much faster and at light speed compared to the way I did it. And I'm going to go into my story in one of the case studies that I have further on in the training. So I'll let that be, but I just want to kind of give you an outline here. All right. So this is basically the outline for, and also the why that kind of ties all of these future eight trainings together. But this is going to be comprised of two case studies. All right. These case studies are of deals that I actually did early on in my process of going bigger that single-handedly added $1.1 million to my net worth and $130,000 a year in cash flow. All right. The first big deal I did replaced my wife's income with one deal and added $500,000 to our net worth. Right. The first 11 years of my real estate career was buying small multifamily, right? 2 through 4 units. And I found that it was very difficult to scale that and achieve the big financial goals that I had, which was financial freedom by the time I was 40 years old. I was able to achieve that at the time of 33 years old because I started when I was 22. I was like in diapers, right? Not everybody has the luxury in terms of the timeline that I had, which allowed me to just sheerly use the law of compound interest in scaling my business. And also, that runway gave me the life expectancy to deal with the multiple prison shankings, teeth kickings, throat stompings that I went through that were painful to me. But because I started early on, I was able to recover from them. All right, to this point in time. So, that being said, we have to ask the question, why go bigger? It's not just something that's just sexy. I definitely don't do it for ego purposes. If I was able to accomplish the same thing by owning one, two family property, or even not even owning real estate at all, if it was investing in stocks, I would, do that. Right. I love real estate because it's tangible. I can touch it, that sort of thing. But if it did not have the financial benefits that it does from being able to build your net worth and cash flow, generational wealth, tax benefits, all that stuff, I would choose another avenue. But I chose real estate and it's been effective for me. So I'm here to share that with you. So why go bigger? Number one reason is burnout. If you're an experienced real estate investor, I started as a residential real estate agent. I specialized in residential income property. And so I would sell a two-family property or a single-family investment property to somebody that was looking to fund their, daughter or son's college education. And they said, okay, if I own this for 18 years, then I'll have enough, equity in the property to be able to pay for my kid's college education. All right. This is how all these conversations started, like future long-term financial planning. What I was really surprised about is that usually maybe 2, 3, 4 years later, they'd call me and say, "Hey, Matt, that property sold to me a couple years ago. I want to sell it. I want to dump it." Right? It's paying me 300 to 400 bucks a month in cash flow, which is great, but the juice just really isn't worth the squeeze anymore. We had an incident that happened, with some tenant, or we were on vacation and we had the proverbial clogged toilet, all that type of story that you hear. And it's just not worth it for us anymore. I can just work overtime and earn the same amount in cash flow. And I have a different plan to save for the, college education, or, my kids will just get loaded up with student debt. That's fine by me. So, um, So that novelty wears off, right? Or they can pick up a side hustle. They can, I'd rather drive, do DoorDash on weekends to get the same amount of financial benefit from a cash flow standpoint and not have to tie up my capital and have this thing that is, difficult to manage or scale, or I can't trust a property management company that I've, gone through two of them. These are all the stories I heard, right? So there's a burnout factor that if you don't scale, then you basically just lose interest. And this has happened to me dozens and dozens and dozens of times as a real estate agent, all right, selling investment properties. Additionally, beyond the burnout factor is that, that novelty does wear off. But secondly, it is difficult to scale operationally. I went through this process when I was, for the first 11 years buying small multifamily. It took me a lot of work to buy 76 doors. It was 25 properties, 76 doors, 11 years to get to financial freedom. Every time I bought a property and bolted that on, there was rehabs that were involved. There was tenant communications, and absorbing that property into the portfolio, it was just difficult to scale. The companies I was using for maintenance and property management, it was very difficult for them to onboard it. I was self-managing during my early career, and that is just like and I was working a full-time, full-time plus 1099 job as a real estate agent. And then I worked in real estate corporations and that sort of thing after that. So it was just very difficult to scale. Imagine buying a 50-unit apartment community or apartment building. You have economies of scale to have a part-time person manage that. It's a lot more interesting for a management company to take over management of that property, like professional property management. I'm not talking about like Chuck in a truck, type of property manager. We're talking about professional property managers. So it's very easy. It's a lot easier to scale that when you're doing larger deals and bolting those on and just weaving them into the operations of your company. All right. Second reason of going bigger is it's faster to achieve those goals. If you're looking to walk away from your job, spend more time with family, and create this lifestyle by design, not by default for yourself and your family, and multi-generational wealth, it's going to be a lot faster to achieve those goals if you're buying deals that add several six figures to your net worth every time you do them and stabilize them, and also several five figures in cash flow each year you do those deals. All right. And then thirdly, this kind of goes hand in hand with it, but it bears worth mentioning is just the sheer scale. Us right now in 2023, we own about 176 units of residential and commercial, residential multifamily and commercial property. And that is earns about $2 million worth of gross rents each year. All you have to do if you want to give yourself a $60,000 raise is bump rents 3% that year across the board. Just think about it. And if you could do that every year, just think about how much that actually adds in cash flow, and then also how much that actually adds to your net worth. Because in commercial real estate, properties are valued like a business. It's really not even the real estate business. It's an actual like operating business company, and the value goes up every time you're able to increase NOI or net operating income, which is rents minus operating expenses. So that $60,000 that you add to the value, assuming a capitalization rate or cap rate, and if this is a term you don't know, just look it up. It's fine. By cap rate, let's say in our area of Rochester, New York, by 8% cap rate, right? That one click of a button, right? That 3% increase you did that year adds $750,000 to your net worth. Additionally, the benefit of commercial is that because of the sheer scale, when you're rapidly increasing the value, is that you're able to refinance these properties every 5 to 7 years and pull out monsters amount of cash, right? Tax free. And use that cash to fund future real estate deals. Or what we do in our case is that we just put it on our balance sheet to strengthen our balance sheet, to maintain our strength as personal guarantors for the larger and larger deals that we do in the future. All right. So that's the why behind it. All right. Additionally, you may be looking at, commercial real estate and hearing this word syndication. And I don't do syndications. I've never done a syndication. ever, right? Syndications are basically is where you pool investors' money together, and it's an SEC, Securities and Exchange Commission, a regulated security, and you have to get all these attorneys involved with it. And for me, I was a C plus B minus student. All this crap makes my head hurt. So you do not need to jump right into syndications when you're looking to do your larger deals, right? You can probably acquire your first $5 to $10 million worth of property, replace your income before you ever have to do a syndication. So just forget about that right now. It's just not necessary. So what's the strategy? All right. So the overall strategy kind of starts here is, and this is what I'm going to talk about in further detail on in the future trainings, is number one is you got to change your education. You may have been educating yourself through, podcasts that are for fix and flippers and, small multifamily or single family investing or short-term rentals or midterm rentals. The best way to change your education is change the podcast you're listening to, change the books that you're reading. So start listening to podcasts where the guests and hosts are talking about commercial real estate. And this is how you can start kind of flipping your education. I do a lot of driving around town. And so I listen to podcasts. I don't listen to music. I go to the gym every morning. I don't listen to music. I listen to podcasts. This is the best way that I learn. And also I'm like hanging out with these titans, right? They don't know I'm hanging out with them, but I'm hanging out with them. So also books, right? Book that I can recommend is Joe Fairless's Apartment Syndication book. Joe Fairless is the host of or actually the founder of the Best Ever Real Estate Investing Advice Ever show, which is a daily real estate podcast. Usually they have larger, types of real estate investors on and that sort of thing. So, but he wrote a great book that gets into the nitty gritty of how commercial real estate works. So you can kind of start to indoctrinate yourself with the terminology, how the mechanics of the business work and all that stuff. So that's step one. Step two is beyond change your education is change your identity and broadcast it. You may have been known to your sphere of influence as Joe head of quality control at Procter & Gamble. Right. This is how your friends know you. This is how your professional colleagues know you. This is how everybody knows you. You may have had a side hustle in real estate this whole time you never told anybody about. Maybe you mentioned it in passing and that sort of thing. But they know you as this, right? So if you're going to commit to commercial real estate, doing larger commercial deals, you have to start to indoctrinate your sphere of influence in terms of what you're doing now, right? And this is I buy X, apartment buildings. I buy large multifamily apartment buildings. I buy small retail strip plazas. That's what I do for a living. So I train my students on change your LinkedIn profile. You're no longer, that Joe, head of quality control at Procter & Gamble, does not serve you in your pursuit of doing larger commercial real estate deals. So start to change that to your sphere of influence and start to plant those seeds in terms of what you're focused on and what your identity is. So how they can anchor you in terms of how you fit into the world. All right. So this is how, there's future trainings on how I do this through social media and all different types of channels, but this is at a high level. All right. So stay tuned for the future trainings and specifically how to do that. In scaling into commercial real estate, granted, you're probably not going to just do a one and done. I just want to buy a 20-unit apartment building and I'm done. Right. This is probably something you want to scale and repeat. So in this whole process of scaling up, and one of the main reasons why residential investors never get into commercial real estate is because of one bottleneck, which is access to capital, or OPM. Right. The second is deal flow. They just don't know how to get deal flow through the commercial real estate channels, and we're going to cover that in future trainings. But these two bottlenecks, there's always going to need to be getting work done. Your OPM, or access to capital, and your deal flow. All right. So when there are opportunities, you can marry those both together as you're scaling into 1 million, 3 million, 5 million, $10 million deals. All right. This is something you can never sleep on. It needs to be continually worked on, and I'll explain why further on in this training. Right. But those are the two bottlenecks that need to be continually worked on so that when you can scale exponentially, then these two bottlenecks scale up exponentially and you start doing larger and larger commercial real estate deals, right? Pushing the envelope. Step number one in this whole process in terms of which bottleneck to work on first, there's this thing that is common misconception in commercial real estate, doing larger deals, is that find the deal and the money will come. Find the deal and the money will come. I thought this too. And I found a deal, didn't work on my OPM, and I couldn't raise the capital for it. Opportunity lost. Several six figures of opportunity lost. Right. So you do not go to the grocery store without money and find what you need at the grocery store and then raise the money for what you get the money first. All right. So this is the reason why this starts first. All right. The reason why is because relationships move at the speed of trust. OPM does not get attracted to you by some killer app that's online that's like, okay, I have this smoking hot real estate deal. I need $1 million for it. I need $300,000 for it. And it's a great deal. So anybody would want to invest in it. Higher net worth individuals that have 50, 100, $200,000 in to dispose of to invest in a income producing real estate investment, they are relationship based people. They only do business with people that they know, like, and trust, not some, Facebook ad they saw, or, something they saw on Realty Mogul or Fundrise or any of these crowdfunding websites, right? Those real estate syndicators that raise money in those deals, that's just a platform for them to raise capital. The capital comes from relationships, and relationships take time to move and build that trust, build that likability, right? Build that comfort factor with you. So this is what has to get started on day one. So I'm going to go into that, but that's the one bottleneck you want to start working on first, because a deal could come to you at any point in time. You could open up your email right now, get an inbox about some smoking hot real estate opportunity. And if you haven't done the work on your OPM in terms of changing that identity, you being an access point to passively invest in real estate opportunities, which everybody wants to invest in real estate. I don't care who you are. Everybody wants to invest in real estate, but they're stopped by the 4 T's, which are the tenants, trash, toilets, and most importantly, time. Right? They don't have time to educate themselves in a new business. They don't have time to manage a deal, find it, figure out how they're going to put together the financing, run the deal, refinance it, all this other stuff, right? They have a job, they have a business, they have family, all that stuff, all right? So after this, working on this bottleneck here is you can start working on the deal flow bottleneck, right? And building your endless deal pipeline and expanding that. All right. And we're to cover this in 3 future trainings in terms of how to source off market and also on market deal flow. All right. And so as you start to, you're educated now, like at a surface level, right? And then you have started to build those relationships with people that we're going to go into the trainings on that as well. And now you start to look at opportunities, understanding how to underwrite those opportunities, analyze them, develop business plans on them, making offers and all that stuff. So that's the next step on it, is working on the deal flow. All right. And when you get this first opportunity, this is the real magical part of this whole thing here, is there's this thing that's what's called a law of the first deal. And I'll go into this, I was inspired by Michael Blanc, who's a huge multifamily investor. And it is really, really true. The reason why I focus on my first 2 deals in terms of the case studies you're going to see in this is because the 4th, 5th, 6th, 7th, 10th, whatever deal that I did after that never would have happened if it wasn't for the first 1 deal that I did. All right. So this is why I'm focusing, trying to focus you on landing your first deal, your first larger deal. And the reason, the law of the first deal is basically this, is that when you acquire your first larger property, the 2nd, 3rd, 4th, and 5th start happening at automatic succession to each other. Why this happens is because, just think about it. All those people that you talked to about an opportunity to invest in this first deal that you raised capital for, is, probably 4 out of 5 of them are going to say no. And they can be reasons of various reasons. It could be that, hey, Jason, you've never done this before. Like, I don't know about this. Or, I have my daughter's, wedding coming up this year, and I need to save as much cash as possible for that. Right. Those people, right? The first group of investors that you raise capital from, that the easiest part to raise capital from is in your like direct, like, people that have, you have the KLT factor with the know, like, and trust factor are, I hate to say it, friends and family. All right. We're going to go into this. All right. There are methods to do this. If everybody, everybody in your family, all your friends are 100% flat broke, there's ways around that. But if you do have that as a soft asset in your network, then use it. All right. Don't be stupid. All right. But those seed investors that help you take down your first deal, um, when those four people that said no, that basically when you have your second opportunity that comes about, you present that opportunity to them. There's a higher conversion factor with those, those four people that said no, right? Not saying that you can only pitch it to five people. I'm just saying 4 out of 5. So you may convert 1 to 2 of those because they saw you just did a deal, right? You took it down. Other people believed in you and you were successful in doing so. You have other investors that were in that deal that act as social proof that, hey, I love getting my monthly checks from Matt, right? This is awesome. Why didn't anybody ever told me about this? So then you have a higher conversion factor on those people, right? And then it starts to balloon out from there. Okay, so you increase your network, all right, beyond friends and family to professional contacts, start making new contacts, building and deepening those relationships as well. And that's how your OPM can grow exponentially. At the same time, with the deal flow part of thing there, you may look at 100 deals before you buy your first one. So all those brokers, other investors you networked with during that process, all of those offers that you made that went nowhere through real estate brokers and that sort of thing, through that activity you're doing, it starts to get you known as an active player in this space on the deal flow side of things. So then that starts to expand as well, right? So all this time and energy that you were put out there, like just depositing in the universe and not getting direct, instantaneous, measurable results, start to have adjacencies that start to pay you back. And this takes time. This is the reason why it's best to start now. So that's how the magic of this whole thing happens. So hope you enjoy the future trainings. Definitely stay tuned on the case studies. So you're going to actually see the case studies for those 2 deals I referenced earlier on. You're going to see exactly how those tactical types of things that I do on the 6 trainings around OPM mastery and deal flow, in terms of how I directly applied those to and how that happened, where the rubber hits the road with an actual opportunity, right? So if you have any other questions, definitely reach out to me. I'm readily available. This is my full-time job in education for experienced real estate investors that want to scale and swim upstream into larger commercial deals. So I'm a resource for you. I want to add value. I'm hoping I'm adding value through this training. So I hope you have a wonderful day and cheers. We'll talk soon.